I'm going to make this very fast because Suzanne's hung up the phone for a couple of minutes so I can do this. Here is the chart that I was telling you about NIO. So on a daily chart, you can see this Fibonacci, which went from this low to this high, where it made its big break, just almost hit this 200%, $40. So sellers were trying to get below the people wanting to sell at 40, and they started to sell here. I saw that, so that's when I sold the 41 calls. I could have even sold the 40 calls, but I do think that NIO will break through and possibly go back higher than 40, so I wanted to make some profit. So that's what I did to protect this 500 shares that I have. Now what you can do, oops, sorry, not that. What you can do with yours is I've simulated here. So I've taken out my stock and my options. Let me just switch accounts so that I get rid of that. So there's your 10 that you bought, the November 20th, 28 calls. No, you bought the 21 calls, you told me. So you paid $3.10 for the 21 calls. I would suggest buying 10 of the 36 puts. And the way you do that is, there's your original 10 calls, is you go into Analyze, Simulated Trades, open up November the 20th, and on the 36 calls, puts, you would buy that one. You can see that it's bought here, and sell the 40. And I would change that to read 10, and change this to read 10. And now here's your risk profile. There's the trading price right now. So without these two items in here, if you were to sell now, your profit would be $13,460. Is that right? It was the 21 call that you bought, or maybe it was the 28. Let's just say it was the 28. I probably got it wrong. So your profit would be $7,045. So when you add the put, you are putting a maximum loss in so that your maximum profit would be only $19.30. But by selling 10 of the 40 calls, now your curve looks like this. So at $37.50, if the stock ended at the same price on November the 20th, you would make $6,144. Not the same numbers I was telling you before, but pretty close. Your profit would be $46.50 if it were to close between $36 and $28. If it went below $28, you would just start making more money. Let's say NIO just crashed due to some scandal and ended up at $22. You would make $10,624. So that's what a collar does. It maximizes your profit on the top, gives you unlimited profit on the bottom, and guarantees you a profit in this area here. And you can play with that. If you want to buy the 34 put, which is less expensive, now your profit goes to $96.20. Your guaranteed would be $36.20. You've still got unlimited, but that's going to start making money at $28. So just play with these and see what you're comfortable with. It's going to be a trade-off. How much do you want to make? How much of a minimum do you want to guarantee yourself? You're already laughing all the way to the bank with 7,000. Would you be happy with 35.40 and the chance to make 95.40, or you just want to get out with your 6,700?